SoftBank just sold its entire stake in Nvidia. Does it know something that the rest of us don't? Hey everyone, I'm Greg Tanner. I have been a television news journalist for 25 years and I specialize in financial markets and economics, as well as the business of sport. Today I'm going to be talking about the topic that's on everybody's minds at the moment, AI. Specifically, whether we're in the midst of a huge bubble in terms of the valuation of these AI companies and the potential dangers for the stock market and the broader economy, which will affect you. Unless you've been living under a rock, you will know that the world has gone all in on artificial intelligence in the last couple of years. Investors and companies pouring hundreds and hundreds of billions of dollars into the technology in the hope and the belief that it will eventually revolutionize the workplace, the world, society, and they want to be in a position to cash in on their investment when that eventually happens. The result of that has been a massive drive up in the valuations of a very small number of the leading AI companies. They have seen their valuations go through the roof as everybody has piled into them, thinking that they are going to be the future of AI. Let's take a look at Nvidia, for example, which is the biggest one of them all. Just 3 years ago, their shares were worth about $12. They're now worth about $200, and the company overall has a valuation of in excess of $5 trillion, making it by far the most valuable company ever, anywhere, full stop. We are now at a point where the leading 7 companies, the Magnificent 7, which are basically all AI-related companies, now represent nearly 40% of the entire S&P 500 index. That is a basket of 500 companies. And the value, 40% of its value almost, is concentrated in just 7 stocks. Now, I am not a financial professional. Let me make that clear. This is not advice. This is just my opinion as someone who has specialized in financial journalism for 15 years, worked at Bloomberg for 10 years. So I have a reasonably decent understanding of these things. That level of concentration of value in such a small number of stocks, to me, is dangerous. It means the S&P 500 is no longer offering you a sort of diversified range of companies to invest in. If you are a pension fund, if you're a sovereign wealth fund, if you're an institutional investor, if you're a retail investor, and you are buying that index, it means you are massively, massively heavily invested in AI. Another way of measuring just how richly valued these companies are is the price to earnings ratio. It is what investors are willing to pay for every dollar earned by a company. Historically, the S&P 500 normally is somewhere between 50 and 20 times earnings. But let me give you the stats on some of these companies. Nvidia is at 54 times earnings. Apple is at 39. Amazon is at 34. The premium that investors are paying is crazy. Now, here's where I get worried. I think investors are being over-optimistic about the timelines of exactly when they are going to start reaping the benefits of the money that they have put into these companies and these technologies. Just like 25 years ago, we had the dot-com mania, where companies were being given super elevated valuations just because they had .com in the name or they were something to do with the internet. Yes, people thought that the internet was going to change everything, and yes, it absolutely did. But the way people were pouring money in and investing was they were thinking that it was going to change the world in 2 years, 3 years. It didn't. It took 20 years. It took 25 years. And I feel like we're making that same mistake again with AI. Investors are prepared to stomach the cash burn that these companies are going through at the moment. All of the capital expenditure, the CapEx, all of the investment, all of the research and development, all of the building of facilities and infrastructure to make AI the next thing. They're prepared to stomach that cash burn for the moment. My fear is that they are thinking they're going to get paid out on this much quicker than they are. Yes, in 20, 25 years, I'm sure AI would have completely changed the world. I don't think it's going to have done that in 2 years. And my fear is that when investors start realizing this, they are going to start selling and they are going to cause a stock market crash. The problem is these AI companies are so big, there is so much money invested in them and riding on them, they employ so many people, and the projects that they're spending on the capital expenditure is propping up so much of certainly the US economy that they are now too big to fail. We're in a situation like we had in 2008 where the banks were too big to fail. I've got a bad feeling that investors are going to realize that their payout is going to be on a much longer time frame than they're currently prepared to stomach. They're going to start selling, and the government is going to have to step in and bail them out. And we've already started hearing noises about bailout from Sam Altman, who arguably is the face of artificial intelligence. He's the CEO of OpenAI, the people that run and develop ChatGPT. He has promised $1.4 trillion of spending to make artificial intelligence become a reality. But when he was on a recent podcast and asked, how are you going to promise $1.4 trillion in spending when your company is only currently making about $13 billion? When he was asked about that, he really didn't like it. And his reaction to me was a bit of a red flag. Here is that interaction.
So I think the single biggest question I've heard all week and hanging over the market is how can the company with 13 billion in revenues make 1.4 trillion of spend commitments? And you've heard the criticism,
First
Sam.
of all, we're doing well more revenue than that. Second of all, Brad, if you want to sell your shares, I'll find you a buyer. If you I just enough. People are. I think there's a lot of people who would love to buy OpenAI shares. I don't think you would,
including myself. Including myself.
People who talk with a lot of breathless concern about our compute stuff or whatever that would be thrilled to buy shares. So I think we could sell, your shares or anybody else's to some of the people who are making the most noise on Twitter, whatever, about this very quickly.
That's a bit of a red flag to me. Sam Altman was asked a completely fair question, I believe, and the way he shut it down and he treated that guy was concerning. But the irony is, he then went on another podcast very shortly afterwards, and he started saying that actually maybe government assistance is going to be needed in order to fulfill these spending promises.
At some level, when something gets sufficiently huge, whether or not they are on paper, the federal government is kind of the insurer of last resort, as we've seen in various financial crises and insurance companies screwing things up.
Does that not sound like he's softening the market up for a bailout? Anyway, here is my final thought. I believe we are well and truly in a massive AI bubble. I think investors are going to realize that the timeline for them getting paid out is much longer than they are currently prepared for, and they're going to sell, and there will be a government bailout. Just because over the last few years, line goes up in terms of the stock market, and line goes up in terms of economic activity because of all this spending that these companies have done, does not mean that we are in a healthy situation.